Securities has the advantages of making them tradable on the blockchain 24/7 in a permissionless environment. However, liquidity can be low, which is why Convergence Finance wants to introduce the Convergence protocol to make it easy to trade between security tokens and utility tokens. In this video, I'll explain what Convergence is, and more importantly, I'll show you how to earn 130% APY by contributing to Ethereum Convergence liquidity pools. Hey everyone, and welcome. This is Robert with Altcoin Buzz, and in today's video I'm going to be showing you what you need to know about Convergence Finance. Now, the cool thing that I'm going to start off with is that yes, you can earn 130% APY by contributing to these Convergence and Ethereum liquidity pools on their website. So that's the thing most people are going to be excited about. But before we get into that, I want to take a step back and explain a little bit about what Convergence does, why it exists, and what its value proposition is, because I think it's always important to have an intuitive understanding of what something does and not just focusing on the high APY. So with that being said, Convergence is the decentralized interchangeable asset protocol. And to understand why we need Convergence, to understand why Convergence is important, we need to understand this concept of security tokens. So if you want to invest in Apple, if you want to invest in Walmart, the traditional way of doing that is going to a broker such as your bank or a financial institution and purchasing that stock. Now, the problem with doing this is that yes, it does allow you to own those stocks. Yes, it allows you to receive dividends. You can sell them for price appreciation, but you're doing all of that in a very centralized, very traditional way. There's a lot of disadvantages. The markets can get closed. The markets can get shut down at various times. With tokenization, what we're doing is we're taking these securities and we're transforming them into tokens on the blockchain so they can be traded. Apple, Walmart, things like this, you can trade them exactly the same as you would basic attention token or Ethereum. Sounds good. However, there are some issues with that as well. One of the key components that is a disadvantage of this is that liquidity for security tokens is incredibly low when we compare it to utility tokens. And I've got a screenshot here from the white paper. I'll try to zoom this in for you all so that you can see, but you can barely even see the security token liquidity when we compare it to the DEX liquidity for traditional tokens. So obviously, low liquidity is a major drawback because when we have low liquidity, it can be harder to buy, it can be harder to sell without having major impacts in the swing of the price. On top of that, when we talk about traditional DeFi, when we talk about traditional Ethereum-based tokens specifically, we have this concept of money Legos, or to use a more fancy term, we have this thing called composability, which basically means that we can build different protocols on top of each other. So we can trade from Uniswap, then we can roll it over into a DeFi protocol, then we can do leverage trading with it. We can do all of these different things, but with security tokens as they currently stand, they're basically traded just like normal stocks. However, it's on a centralized exchange. So yes, they're tokenized. Yes, that is a bit of a step forward. But as far as that liquidity, as far as that composability, they're simply not at the same level of decentralized finance with utility tokens, specifically those based on kind of Ethereum, Binance Smart Chain. So what Convergence wants to do is it wants to change all of this by taking security tokens, wrapping them so that they can be traded and used just like the traditional utility tokens that we're all so familiar with. So what you can see here, part of the problem statement, over 95% of the total value locked in DeFi is driven by native cryptos. Synthetic asset exchanges are pioneers to offer stock and index exposure. However, if a cryptocurrency user wants to buy pre-IPO round, a startup, equity funds, or even real estate, there's no venue that can support these opportunities and liquidity. So Convergence will be integrating this and offering this through three unique steps. The first of these is wrapped security tokens. So just as you think of the Binance to Binance Smart Chain, or if you think about an Ethereum to Binance Smart Chain, it's basically a bridge. Or if we talk about Bitcoin, right? We take Bitcoin, we wrap it into a layer that's compatible with Ethereum. That's actually probably the best example. We've got Bitcoin. It's an asset. It's on its own chain, but we want to be able to use it in DeFi. We want to be able to use it on all of these different Ethereum-based platforms. We can wrap that Bitcoin from traditional Bitcoin to WBTC. So that's kind of the same thing that's going on here. They're going to be taking these STOs, these security tokens, they're going to be wrapping it into a format that's compatible with Ethereum so that you can trade them on decentralized exchanges, use them in different DeFi protocols, things like that. And this is one thing that I find very interesting. They say we will soon see stable coins supported by WSTs. And when they say WSTs, that's referring to wrapped security tokens, lending and borrowing protocols with WSTs as collateral. So imagine now you want to take out a stablecoin loan, you want to take out USDC coin, but instead of depositing your Ethereum, you deposit a wrapped security version of Apple or a wrapped security version of Tesla. So that's the huge potential that they're bringing to this ecosystem. And then lastly, they're obviously going to have a governance token. The native token is going to be CONV for the convergence. So it'll have governance rights, split of the transaction fees, and then privilege asset, which I will get more into in the tokenomics portion. But for now, I want to jump right over and show you these insanely high 130% APY. So the first thing that we've got to understand is that a lot of the features for this, as with many of the projects that I cover, are still in development, are still being rolled out. So, like I said, at some point they are going to have that convergence layer where you can take security tokens, wrap them, and then have the wrapped version of that security token. Right now, we're still kind of in the early phases. So we have a couple features. We have the ability to swap tokens, we have the ability to pool tokens, and then we have the ability to stake tokens. So I'm going to walk you through all of these features, starting with the ability to swap, because what I want you to show you with these pools is that we do have liquidity pools, so we can contribute to this Converse to USDT pool. We also have the ability to stake. So the goal for this video is to go through, make a trade, and get some convergence. So on the website here, you can see that a lot of these features are still under development. Like I said, at some point, they're going to have the ability to take security tokens, wrap them, and create that WST version of them. Right now, and again, with a lot of the projects that I cover, they're kind of still in the early phases. So with that being said, we have the ability to swap between tokens, we have the ability to pool, we have the ability to stake. Now, what I'm going to do in this video, I want to start off by showing you how to get the CONV token. After that, we will contribute to a liquidity pool, and then lastly that we will go to those staking pools. So first off, we're going to do a simple swap, and to do this we want to be sure that we are connected with our MetaMask, and for 0.01 Ethereum we're going to get about 463 of these CONV tokens, and it says you will receive no less than this amount. We're going to go ahead and click swap. And what I want to do, I always like to check at the ETH gas station just to make sure. So we're going to go to ETH gas station. All right, so it's telling us that 99 is about fast. What I'm going to do here for this transaction, I don't like using the fast gas speed because I feel like you use a little bit more than you need to. I don't like using slow. So we're going to go right here in the middle with average. We're going to click save, and then we are going to go ahead and confirm that transaction. And then like I show you all, every time you do a transaction on Ethereum, you have the ability of viewing that transaction. You have the ability of checking it out on Etherscan just to see the progress of that transaction, an estimated confirmation time. See, it's showing us less than 4 minutes. We should hopefully be confirmed, which again is one of the things why I like using that average gas speed. Slow, you don't know how long you could take. Fast, it's going to go through really fast, but you might be spending a little bit more gas than you need. Transaction has been confirmed, so we're going to go back to Convergence, and we want to add this token to MetaMask. And then now if we go to the MetaMask wallet, you can see that we do indeed have, under our assets tab, we're going to have that Convergence token. That is basically holding the Convergence token. Now I'm going to go to pools, and what I want to show you is that at the very basics, if you don't want to provide liquidity, if you don't want to go through all these fancy steps, you can still stake your CONV right now, 21% APY. So even without contributing liquidity, even without doing anything fancy, you can still contribute to that 21% APY. That being said, some people will want to bump it up a notch, so we're going to go to liquidity pools, and we are going to contribute to that Converse and Ethereum trading pair. So we're going to go ahead and select that. We want to add the maximum amount of convergence liquidity, and again, this is something that's very familiar to Uniswap, PancakeSwap, any of these AAMs that you usually use. They're going to ask you to put in equal amounts of both tokens. So an equal amount of value of Ethereum compared also with that CONV token. We're going to go ahead and add that liquidity, and it's going to tell us that we're going to get about 1.75 LP tokens. So let's go ahead and add liquidity. Again, we will be using the average speed. First, we must confirm this transaction. And it says that that transaction has been confirmed. So hopefully if we refresh this page, we should see that we've unlocked that. Now, and this is one thing I like to point out, we always have to do somewhat of two transactions. The first is initial transaction to unlock spending the asset. The second is the transaction to actually put that asset into the liquidity pool. So again, with gas fee, I'm going to make sure that I'm sitting on average. I'm going to go ahead and save and confirm that. That transaction will again be broadcast to the network where we can view the details on Etherscan while we wait. it's showing us that that transaction is confirmed. So what we're going to go is we see that we now have this LP token. So we're going to add that to MetaMask. And now that we have those LP tokens, what we want to do is we actually want to go back to those staking pools. So this is our LP token. We want to stake those LP tokens that we have, and we're going to go ahead and click stake. Again, this will be another Ethereum transaction, so this is one thing that I do have to point out. There are a lot of Ethereum transactions here, and this is completely up to you, completely your decision, but one thing I would suggest is keep in mind how much you're spending on an Ethereum transaction compared with the same amount that you're actually putting in this protocol, right? So if you're spending $10 or $100 on Ethereum gas and you're putting in $10, just keep things in perspective. Again, if you're making larger investments, this Ethereum gas fee will sound comparatively smaller. We are going to go ahead and do this unlock transaction with an average gas fee. Go ahead and click save and confirm. And again, this is just to unlock us doing these tokens. It's not actually us sending the tokens to the protocol. Anytime you do one of these transactions on Ethereum, you have to really do two steps. The first is unlocking that asset. The second is actually sending that asset to the protocol. Now, the cool thing is you only have to unlock an asset once, and then you can keep topping up the protocol as much as you want. We've been approved. And now what we want to do is we want to go back here, and it's going to ask us to actually deposit those tokens. So again, we want to make sure we are on an average gas fee. We'll go ahead and save that, confirm. And I know it doesn't really make it go any faster, but I just like watching the transaction go on Etherscan because it gives you some things to look at. One thing that I like is this estimated confirmation duration. It says less than 42 minutes. And then this is a new beta feature that they have. The pending transaction queue is the state of the transaction in the transaction pool. So what it looks like is the closer we get to 100%, the closer we are for having that transaction picked up, processed, and put into the next block. So just waiting here. As soon as that's done, we'll jump back to Convergence and take a look at our dashboard. Alrighty, that transaction is a success. It says we have successfully staked. Now what you can see, if we go back here, we are earning CONV. So it says this is the total CONV reward earned in the staking pool since staking, claimable in CONV and vested CONV. Now, one thing that I do want to point out, and the way that this works, is when you go to claim your CONV, you can't pull it out all at once. So what it says, you can claim 4% of your CONV reward immediately. The remaining vested CONV reward will be released each week for the next 6 months. The amount released each week is determined by your historical staking rewards. So you are getting an insanely high APY, but just keep in mind with that delayed release schedule, you shouldn't be staking this if this is money that you're going to need next week to pay rent or something like that, because you're only going to be able to pull out a certain amount at once. So that's an overview of how to do it, how to go from Ethereum to the CONV token, deposit that as liquidity, and then to wrap everything up, stake those LP tokens into getting that 130% APY. Now, on the flip side, to claim CONV, I'm not going to claim it now because I've earned basically nothing, and I would spend like $30 in Ethereum gas to claim this, but you can see that I do have the ability to claim that CONV with a simple Ethereum transaction. And then if I'm done, I also have the ability to unstake that CONV as well. So that's an overview of what the protocol does, how it works. Now I want to go just a little bit more into the tokenomics of the protocol. So with this governance token, again, CONV being the native governance token, it conveys certain governance rights. So it says the CONV token and its holders form a self-governed community that reflects the needs of its members. Holders may vote on various matters such as new assets, listing on exchanges, and any liquidity thresholds to be maintained. So having a certain amount of liquidity in the protocol, what new assets will be added, what new features will be incorporated into the site. All of this will be carried out through the governance functions of the underlying CONV token, a split of transaction fees. So liquidity providers will receive a split of the transaction fees in the form of CONV tokens. So if we go back to these liquidity pools here, what we can see is that we do have the ability to earn some of those trading fees from those various forms of liquidity pools. Obviously, we literally just put this in, so we've not really earned a lot yet or any at all. But that being said, we do have the ability to earn CONV tokens as a reward for providing those liquidity. Liquidity providers will receive a split of the transaction fee in the form of CONV tokens. So we're getting a little bit of those CONV tokens for the transactions. And then privileged asset, this is something that's pretty cool. Holders of the token may also receive exclusive participation access to new initial WST offerings and pre-sale events. So Not only do we hold those CONV tokens, we get that high APY by staking them, but we also get exclusive access to some of these WSTs. Maybe we have the first chance to buy a new wrapped security token as it comes out simply by holding those CONV tokens. So in conclusion, Convergence Finance, as I said, is a decentralized interchangeable asset protocol that's really taking the benefits of traditional stocks and fusing them with DeFi. Now, the actual process of tokenizing traditional financial assets was part of the solution, and I don't want it to get misconstrued that somehow security tokens as they aren't good, because they are a major step forward. And what Convergence is doing isn't saying anything bad about those tokens. It's just saying, hey, we can take this to the next level, because yes, you're tokenized, but we want to take you to the next level where you can be used in DeFi protocols, where you can be used as collateral. So they're really taking those security tokens, bringing them up to the level of full DeFi tokens that are completely interoperable with the ecosystem. So incredibly exciting there. It's something that I'm looking forward to. It's something that I really enjoyed making this video. I hope you found the video useful. I'd like to thank you for watching, and I'll see you next time.